When we talk about a growth stock, we're talking about a stock that we expect to grow at a value much higher than what we expect the general market to grow. So at the moment, we're expecting the general market to be in a decline for the next probably 12 to 18 months as the US and the globe go into a recession. And when we look for good investments, we obviously want to find investments that are going to outperform the market in general, especially when we're going for a negative return over the next 12 to 18 months moving forward. So when we're looking for stocks like that, we have to look for specific industries that are really looking like they're going to take off moving forward. And for us, we don't believe it's going to be the tech stocks anymore. We believe the tech stock growth phase is slowly coming to an end as we kind of go into transition back towards a new technology in the blockchain space, how the industry kind of has to figure out how to create value out of the blockchain space and implement those values into their own companies. And that we believe is going to take some time. The crypto space itself potentially is going to be a growth space, but that's not what this presentation is about. This presentation is about the real growth industries moving forward that we believe are going to be the big boys in the market over the next probably 5 to 10 years. And it's really all got to do with energy, the energy policies that governments are putting into place. Those energy policies are going to be very, very positive for electric vehicles, for green energy, for a lower carbon future, and the companies that are going to benefit from the global economy transitioning to a lower carbon future. And when we talk about those real growth industries, we need to find companies within those industries that are really primed in position for that growth spurt to occur and to take advantage of that growth spurt. And today we believe we found a company that will do just that. So stick around. We're about to break that down. In the meantime, take a look at our investor guidance service. This is where we recommend all of our stocks to our private clients, to our private members. Our current portfolio is sitting at 13.06% positive over the last year compared to the overall market, which is definitely down. When we look at the US, our portfolio is up 30.52% over the past year versus negative 9.81 over the same period for the general market, for the S&P. Australia, our portfolio is up 6.29% versus negative 6.93% over the same period for the Aussie market, and our South African market, our South African portfolio up 5.26% versus a positive 3.08% for the South African market. So we are broadly outperforming the markets, not only at a global scale, but at an individual level. And we believe that we can maintain that performance moving forward into these volatile times. So if you're interested in being on board with us, you can check out all of that information at the link below. So in the meantime, let's get into it. So when we talk about a transition into a more carbon neutral society or carbon neutral global economy, we cannot ignore the role of rare earth metals or rare earth elements as they're known in that kind of revolution of our energy system, of our technology revolution. We talk about rare earth elements as being a set of 17 metallic elements that are necessary components of more than 200 products across a wide range of applications, especially high-tech consumer products, including cell phones, tablets, flat-screen monitors, televisions. Basically anything with a screen requires rare earth elements. You have your computer hard drives, you've got robotics, you've got high-tech medical devices, CAT scanners, electric and hybrid vehicles, wind turbines. The list of products that require these rare earth elements is long and growing, especially as we transition, as I said, into this green energy future. We talk about also significant defense applications such as guidance systems, lasers, radars, and sonar systems. So extremely important elements in that global economic revolution. And when we look at where those rare earth elements are currently sitting, this is where the investment opportunity really starts to shine through. So these rare earth elements are critical ingredients for a greener economy, and given the current geopolitical climate, The location of reserves and successfully operated mines are increasingly important and valuable to the world economy. So when we talk about geopolitical tension between the US and China, I don't think that's likely to get much better over the next few years. I think if anything, that's going to increase. Taiwan, obviously a major impact point there. Collusion or at least allyship with Russia. Also another serious critical point that will lead to US-China tensions increasing rather than decreasing. You're also looking at a more populist movement in terms of policies. You talk about Trump's drive to bring the jobs back to America, bring manufacturing back to America. All of that actually hurts China. So China wants to prevent that at all costs, and the US is obviously leaning more towards that over the future. So if you're going to bring manufacturing back home, you need the ingredients of that manufacturing process at home to really take advantage of that supply chain and the supply chain issues that we currently have. China currently dominates the global production with 57.5% of the global market, while the US lags far behind with just 15.6%. So you can see China dominates the rare earth elements market, and it makes sense because they dominate the electronics markets around the world currently. But if that starts to shift back towards a more US-centric manufacturing process, manufacturing industry, then rare earth elements are going to be a massive part of that, as we keep saying. Rare earth minerals and why they are so important to electronics is the magnetic properties that they hold. The magnetic properties of these rare earth metals are what make them so useful and valuable in many of today's true growth industries, as we said, electric vehicles, green energy, robotics, etc. One such magnet is the neodymium praseodymium or NdPr magnet, which, being the cheapest to produce, accounts for the majority of global rare earth permanent magnet production. Currently, the electric vehicle market consumes 5% of the NdPr market today. Estimates conclude that by 2030, around 50% of NdPr will be utilized in the production of electric vehicles alone, a significant increase in demand. So as we keep saying, if we just see that revolution of the global economy back towards a more green energy solution, a less carbon intensive global economy, electric vehicles are going to play a major role in that. And if that alone will drive NdPr demand up by at least 50%, but you also need these magnets in things like robotics, in drones, in wind turbines. The list, as I keep saying, is endless. And if that list is endless, then we know that NdPr is going to be a massive ingredient in the products of the future. And if the products of the future are going to be produced in the US, we need a local, or the US needs a local producer of these rare earth elements. And that's where we find MP Materials under stock ticker MP on the NYSE and under sector metals and mining. MP Materials is a owner and operator of a rare earth mining and processing facility, including the Mountain Pass rare earth mine located in California, USA. The company holds mineral rights to the mine and surrounding areas, as well as intellectual property rights related to the processing and development of rare earth minerals. Their goals include securing a supply chain of rare earth minerals for the US industry, with particular focus on NdPr magnets. As we said, those are the real key components of electronics of the future. And by so doing, onshoring jobs, preserving national security, and building a carbon-reduced future. Recent successes include turning the Mountain Pass mine into a successful, environmentally sustainable project that has created over 300 local jobs and 5-year earnings growth in excess of 102%. So what's great about this growth company is that we're already seeing solid earnings out of the company, and we expect those solid earnings to continue moving forward because, as we said, it is involved in the key processes of the growth industries of the future. Valuation wise, not a great score for what we look at. Market cap 6.6 billion, so very nice market cap. No dividend as of yet though. PE ratio versus industry quite expensive in comparison to the industry. PS ratio versus the industry, or price to sales ratio, quite expensive versus the industry, and price to book ratio quite expensive versus the industry. But that being said, we look at this company not from a current valuation point of view. It's more of a growth stock, and a growth stock heading into metals and mining. So we're not looking at some kind of technology growth stock, which we believe are all overdone at this point. We're looking at something completely different, completely new, and We believe MP Materials Corp has serious growth value moving forward, especially when you look at the dynamics of the potential energy situation moving forward with China, with global green energy drive, etc., as we just discussed in the previous slide. So valuation-wise, not a great score, but it is a growth company, and that's why we like it, and that's why we are recommending it. Performance-wise, they've done extremely well since inception. We're looking at 5-year earnings growth, considering the company is only 5 years old. 5-year earnings growth versus the industry of 102.9% versus the industry of 29.2%. 1-year earnings growth versus their 5-year average is 205. So that's only accelerating. It's not just 1 year, one-off year. That earnings has accelerated with the current boom in minerals. That's obviously drop off probably over the next 1 or 2 years as we kind of head into tough economic conditions, but we don't think it's going to drop to a point where it's a worry. It actually is still great value for us at this point, especially when we look at the technicals of the chart. This is what we really like, is the technical situation, which we'll get to a little bit later. 1-year earnings growth versus industry. So the industry had a great year at 93%, but when you look at MP, they smashed that. They came out with 205.5% earnings growth this year. And return on equity versus industry, 21.4% versus 20%. So pretty much in line, but slightly better than the industry. So performance-wise, this company is in line and operating at optimum. When we look at the financials, also have a great balance sheet. Current ratio off the charts at 19.7%, net debt to equity ratio 58.5%, debt to cash flow coverage 40%, and interest coverage again off the chart at 59.1%. So they've got lots of room to add some debt to their balance sheet without putting it under too much pressure. They have lots of room to start to maybe give a little bit of a cash back to shareholders in the form of a dividend. So there's lots of upside to us when we look at the financials, when we look at the balance sheet. This company is just primed for some big growth moving forward into an industry that's primed for some big growth moving forward. And then moving on to management. Compensation-wise, very high versus the industry target. But that being said, it is a company that still has high industry or high insider ownership. The insider, the CEO, James Limsky, I think his name is, he still owns a fair portion of the company, so that's why his compensation would be so high. He still has a very high percentage ownership of the company. As we said, it's a growth company. It's only been around for 5 years, so that ownership will begin to drop down as the public steps in and starts to buy up those shares. So again, there's potentially lots of room for upside when it comes to selling those shares to the public and getting some good demand behind those shares moving forward. CEO experience, 5 years. As we know, the company's only 5 years old. So it's 5 years CEO experience and average management experience around about 5 years as well. As we mentioned, it's only a 5-year-old company. So it's not a huge downer for us, but it's basically in line with what you would expect from such a new company. It means the management's still around. It means the CEO still owns a lot of shares. He hasn't sold anything in the last 2 reporting periods. He believes in the company. So we like that. We like the potential of this management team moving forward because they've obviously done they've done really well over the last few years in terms of earnings, etc. So we expect more of that moving forward. We look at the top 5 shareholders, JHL Capital Group, which is actually owned by James Litinsky, the CEO. So when you look at it as a whole, we still have around about 25%, I would say, of insider ownership, probably more than that. JHL Capital Group is considered a financial advisory firm, but it's owned by owned and founded by James Litinsky, who's the CEO of MP Materials Corp as well. So let's, as an estimate, say that insiders still own about 25%, although we have it as 10% insiders ownership here because it doesn't take into account the JHA Capital Group as insiders. But looking at insider ownership around 25%, which is actually a good thing when you look at how well the company's doing. It means they believe in the company. It means there's room for growth and room for allocation of shares moving forward. You have QVT Financials, you have Shenge Resources Holdings, and then down at the bottom, the big boys, you've got Vanguard Group, only 4.78%. So, pretty decent shareholding in the top 5.
nothing too worrying. And as you can see there's a little bit of government ownership in there, 0.02, very small ownership, but government ownership in this kind of industry is exactly what you want, because they're going to be backing any potential pitfalls that this mining and energy mining and materials company may have, which is obviously a big thing at the moment. Mining and energy companies under serious pressure, but if you have government ownership behind it, then they're going to get a lot of leeway in terms of any potential issues down in the environmental sector and things along those lines. So looking at MP Materials Corp as a whole, valuation-wise, not great, but as we said, it's very much in line with the growth stock, and we like what we see moving forward. Performance-wise, done exceptionally well. Financials, the balance sheet looks exceptionally well. We were kind of strict on management in terms of compensation, being a little bit too high, but they do own 25% of the company, so that's probably being a little bit too strict. So you could probably increase that management score up to 100% as well. But overall, fundamentally, we think pretty decent score for MP Materials Corp, maybe even being a little bit too strict on them in some regards. But yeah, it's a great technical picture. It's a great holistic story for the company moving forward in terms of geopolitics, energy policy, rare earth metals being very, very rare. That's why they're called rare earth metals, and MP owning a big chunk of what's available. They own 15%, would provide 15% of rare earth metal supply into the global economy. The company is trading, let's look at some pros and cons. Company is trading below estimated fair value of around about $53 based on future cash flows. The current net profit margin of 49.3% is higher than the last year, so it's a great profit margin as well. You have earnings growing significantly by 100% per year over the past 5 years. Return on equity, 21.4%, is considered high. The balance sheet is more cash than its total debt, and as we said, it provides 15% of global rare earth metal supplies to the global economy, to the global rare earth metal markets. Cons wise, expensive based on its price to earnings ratio, but as we said, it's a growth stock, so take that with a pinch of salt. It has a high level of non-cash earnings, and as we said, it has no dividend, but there's definitely room for a dividend moving forward down the line, so we're not too worried about that either. So as we said, been a little bit strict in terms of fundamental scores, but we really like the company, we really like the story, and we'll get into the technicals, which we really like as well. So first thing to note from a technicals point of view is that the company isn't very old. It only listed in June of 2020, so not much in terms of a price history. But that being said, the history that we do have provides an exceptionally good picture for a growth of its share price moving forward. This is our basically prime setup in terms of what we look for in a price chart. Beautiful, what we call an ABC running flat with great structure in the middle. Nice length of correction, everything we would look for. Came down back to test this weekly order block that we have at the bottom, bounced really nicely off those levels, and exactly from a point we would expect a good bounce. All this liquidity sitting under here, all the weak hands that got sold into that weakness or sold into that weakness have now lost out in a big way, because we are now moving pretty strongly to the upside. We are already get my numbers right here, we are already looking at approximately 40% off the lows, going into a little bit of consolidation. We may be here for a couple of days / weeks before bouncing higher, but I wouldn't be too lazy in terms of getting into this one. I would try get in sooner rather than later, because this one could definitely run much further than you want it to. So keep an eye on this one. Our full target for this one is around about $70 initially, but probably something we're going to hold beyond that. This is just initial targets, which as you can see give us a good 85% upside potential if we get all the way up there. Target 1, we're looking at 53, target 2 at around about 60. So I'd look to accumulate this stock anywhere basically between the $35 and $45 level, so somewhere in this region. I wouldn't want to get too far beyond that, so I want to be a little bit greedy in getting into this one ASAP, and just allow the stock to do its thing and get in from an early level where we can take advantage of that. So this is our buy zone, looking really good, and yeah, just a great technical picture, a great fundamental story, as we said, a really good fundamental score, even if we were pretty strict on them, and just a great looking future for this company. So yeah, excited to be a part of it, excited to be a shareholder, and looking forward to seeing what happens in the future.